Ladies and gentlemen, thank you for being with us for this opening keynote, afternoon keynote of the Private Equity Exchange 19th edition. I hope you enjoyed this morning conferences and that you discovered a lot of tips and piece of wisdom from the speakers we gathered for you. To introduce our speaker for the opening keynote, the keynote afternoon keynote, or should I say the leader, I'm very glad to present Simon Mark, Senior MD and Global Head of Private Equity at PSP, one of the largest pension fund and LP in Canada, with $170 billion under management. Simon, hello. We are glad that you accepted to join us today. Could you please share with us your thoughts and visions about maybe the challenges and opportunities from your perspective of global institutional investor? But also, as we know, why and how Europe and France are crucial in your developments and deal origination.
Yeah, thanks. No, very happy to do so. And maybe, well, I'll start just to say, how glad I am to be on this conference. I appreciate it's, it's a different environment, but always very keen to participate. Maybe just to start with a few words on PSP, because I don't know how much people know us. I think we're quite large, but we tend to be rather discreet. So what we stand for is, we have a public service pension plan in Canada. The organization is about 20 years old. I think last year we celebrated our 20th anniversary. And the firm was really set up by the government of Canada in its great wisdom, starting to realize that pensions can be probably better managed by external managers, and setting up the business really to serve and to manage the pension liabilities and assets for about half a million of public servants in the army, in the police, in the reserve forces, and so on. So that's what we've been doing. We started with zero on the balance sheet 20 years ago, as you mentioned, 170 thereabout. Last year, I think, sort of getting closer to 200, and as we grow bigger in the next sort of 10 to 15 years, probably getting closer to 350 billion, 400 billion, something like that. In a nutshell, we manage and invest that money between public and private, give or take 50-50 between public investments and private. And within private, we do infrastructure, we do real estate, private equity, credit, natural resources. So the private equity portfolio, which is the one I'm leading, is about 30 billion of assets. As you mentioned, I think we're both a significant LP, but we're also a large direct investor. So the way I typically describe our business model is we're in the partnership business. That's what we do. We partner with private equity firms, we partner with companies, we partner with entrepreneurs. Just to go back to what you mentioned, I think the year has been really sort of unprecedented in terms of the amount of change we've seen. And if you've been in private equity, I think for most people that it would have been a very good year. We went into the crisis posting the stronger return of the firm. We are going this year probably to have record level of returns. And that's true of us, that's true of a number of our partners. I think the key has been really around partner selection, sector allocation, and really, in a year where you would have expected something very dire and in a way more difficult so than the 2008 crisis. The speed at which the market has recovered and private equity participants have moved on has been unprecedented. And clearly, so we do conferences online, which is way easy, but we've been doing transactions online. And if you had asked me whether that would be possible to do any large transaction online a year ago, I would have thought that it would not be the case. I think when we look again at our own portfolio, we've been deploying. I think when we finish the year, we have a March year-end, probably between 5 and 6 billion of assets during the year. We've been involved in very large transactions globally in the US, in Europe, and in Asia. We've been helping our companies to go very quickly on the offense. I think we had probably a month or so where our businesses sort of had to make sure that we had the right level of liquidity. But that speaks to the strength of a private equity model. Probably within 2 weeks to a month, I think these topics were sorted, and I think we were back on the offense and going back on the market. So in that respect, it has been very much of an extraordinary year. As you all have seen, I think the valuation levels have gone back up, and you've seen really a bifurcation of sectors. And that's where our portfolio has been for some time. A lot of technology, a lot of healthcare. We do quite a bit in financial services and insurance in particular. And these sectors have performed very strongly. I think, again, when we look at the year, the portfolio has not only performed quite strongly in the context of a crisis, but we have maybe probably less than 10% of our businesses which have a down year. The vast majority are on plan, and we probably have a third of the portfolio which is ahead of plan pre-COVID. So I think that's again, that was quite a surprise, a good surprise, and I think it's probably true of most people. So clearly the global outlook has been one which has been very robust for private equity, and we saw the market picking up very quickly in Asia, going back in North America, again, very early in the summer, and probably with a bit of a lag in Europe, but still picking up in the last year. To answer your question, again, our portfolio is about half in North America and the balance between Europe and Asia. I wouldn't say we are necessarily, long on the macro as far as Europe is concerned, but we see a lot of great opportunities to back very high quality businesses. And again, when you look at the last year, I think it's now become clear that Brexit has pretty much been a non-event. It's been a very visible event from a political standpoint, but from a business and market standpoint, it has been very much been a non-event. And if anything, I think the sigh of relief as things are clarified. But when we look through our portfolio and our investments, we see very little impact. And obviously, given the broader impact of COVID, that's something very minor compared to that. So again, we see Europe as probably, and we see that in the Eurozone in particular, an area where economic recovery will be slower. Yes, clearly the social measures that have been taken in a number of countries, and in France in particular, have been very helpful for businesses to weather the storm. And again, some of our portfolio companies have greatly benefited from those. So I think that's been very, very impactful. But the macro environment is probably not one that is super strong. So I think what we are doing, and I think what most private equity are doing, is really focusing on those players in Europe and in France that are local champions, that have a strong local IP, but really have a potential of being European and global champions. Again, when we look through our portfolio, a number of our businesses which are based in Europe, for instance, we're a large investor in Galderma, which is sort of a beauty and cosmetic business that was carved out of Nestlé last year. It is a European business, but North America is the larger market. Growth is in Asia, and I think we see this as a potential going forward. Just maybe very quickly to zoom on France before I sort of end with a few sort of broader remarks on the industry. France is a very important market for us. We've been in France for many years. We are in France in private equity. Our portfolio in PE is about 2 to 3 billion. We are there in infrastructure. I think we are owners of TDF. We own a large real estate portfolio, and we have a large credit portfolio. So France for us is both, in a way, somewhat of a domestic market, not just because of me, but because it's both a very familiar environment for us. Again, we are very much in tune with the culture of the people and the entrepreneurs here, but also one that we think as a global investor we can support with not only our North American and global reach, but in Asia and other parts of the world. And as you know, we are proud owners of very high quality businesses in France. We are a very large shareholder in Cerba Healthcare, which is one of the leading diagnostic platform in France, and as you can imagine, has had a very strong year. We are a shareholder in Seva Santé Animale, which is a leader in animal health based in Libourne. Again, very strong French player, very strong French heritage, completely global business. And we are also shareholders alongside management in a business called FIV, which is also a truly global player in industrial engineering. And that's really what we do. And we look at adding a few names in this year and the next few years, but really focusing on great businesses, backing great entrepreneurs, and helping these businesses grow internationally. This is really what we are looking to do. Maybe just to leave you with a few thoughts on the industry and what we think are elements that are going to shape the industry in the next few years. One is digital. I'll go quickly through that because we're all seeing that, and we're all seeing that. Microsoft CEO was saying, in the first 2 months of COVID, we've seen 2 years of digital transformation, and in the last year we've probably seen 5. I think not only the acceleration has been tremendous, but there are a number of things that have been completely unlocked, and they won't go back. It's just the way people work and interact, and some of these conferences, your own business, it's a lot of that will remain virtual for a bit, and that's great. So that's going to be a key driver for a longer time. Clearly, the LP-GP relationship keeps evolving, and we see a trend of continuation vehicles, businesses being rolled over from one fund to another. That creates clearly for people like us an element of concern. I think we see some clear interest in that, but that's something which is different from what we've seen in the recent years, and the resurgence of the public markets. The IPO market has been very strong. It's been true for us. I think we've taken more businesses public in our portfolio than ever, and the SPACs, I won't go into that detail. I really want to conclude on ESG, because for us, this has been a topic which has been close to our heart for a long time, and as you know, Canadians have been at the forefront of the topic. At the end of last year, PSP led an initiative with the 8 CEOs of those we call the Maple 8, who are the 8 CEOs in the industry in Canada that manage the larger Canadian pension plan. And that was really a call to action around ESG throughout the industry, something very important. But I think the just closing remark on that is, in our view, this is going to be the single most important driver of change in the industry. And we are long-term investors. If you're a long-term investor, that is going to be critical. Your customers, if you're on the wrong trend of ESG, your customers won't buy your product. Your employees won't want to work there. Capital will run away from you. We won't be backing you, and you'll be dead as a business and as an investor. So I think if people don't take that seriously, I think I would really encourage people to think twice, because we see that as a major driver. And as investors, we think about not only the next 4 to 5 years, but the next 10, 20, 50 years. This is going to be a key driver on how investments are going to be made. Private equity is very large. It's mainstream. We have a unique opportunity and a unique responsibility to get this right.
Well, thank you very much for these remarks. I would have a lot of questions, but again, we are a bit in a rush. So thank you very much for these different points. One last question, maybe. Is it for you, in 1 minute, is direct investment going to grow for you, especially in this context of post-crisis and the rebound? In 1 minute.
Yeah, we're sticking to our model, which is about, call it 50-50. And again, our model is very much one of partnership. It's a model with partnership with entrepreneurs, with private equity firms. And so that's working well for us. We are looking to work with great and aligned partner, private equity, entrepreneurs, families.
Okay. Thank you very much, Simon Mark. Have a nice day, and see you in December for the 20th edition, and I hope in person.
That would be great. Thank you so much.
Thank you. Bye-bye.